Look at the prices, gasoline, real estate, you name it, they are all going up. What's going on here and what's going to happen next?
Well, it's going to get much worse, Tucker. You have to remember that inflation really is nothing more than a tax. You know, when the government spends money, they need to get the money. The public has to pay for it. Normally, the government would raise taxes, and then taxpayers send money to the government spends it. But we just passed a $1.9 trillion stimulus bill. Nobody's taxes got raised, but we don't get all this government for free. What happens is the Federal Reserve prints the money, and then the government spends it into circulation. But when that happens, the value of all the money that's already out there goes down, and now the price of everything that you want to buy goes up. And that added price is basically the inflation tax. Well, certainly, as you have inflation, you reduce the real value of the debt. But the government has no plan to pay off the debt. I mean, they're repudiating it. But the real problem is the amount of money they're going to have to spend just to finance all their current commitments. And this is a massive amount of money printing. It's unprecedented inflation because it's the money supply that is being inflated. And as a result, everything costs more because we're not producing more. It's actually the result, the opposite. Americans are at home. They're not producing goods and services, yet we're creating more money to buy the goods and services that fewer people are producing. More money, fewer goods. Prices are just going to keep going up, and it's not going to stop. And I think to everybody that's living in the United States, it's not going to look pretty. And the real problem is the Fed. The Fed pretends that it's transitory, but when they have to admit that it's not transitory, the inflation rate will be far too high for the Fed to do anything about it, because if the Fed actually raises rates to fight inflation, they'll create a much bigger financial crisis than 2008, and the U.S. government will be forced into insolvency.
Government spending is taxation. More spending on the military, more spending welfare, huge increases in government spending. Those are tax hikes. Now, they cut income taxes, but the income tax is just one way the government pays for spending, because all government spending has to be paid for by the public, one way or another. We don't get any government for free. Everything the government does costs us money. So every dime they spend represents taxation in some form. And what they've been doing is they've been printing money, right? The Federal Reserve prints money. And in fact, right now, the Federal Reserve is printing about 55 cents out of every federal dollar that's spent. So more money is being printed and spent than collected in taxation. But all that printing, all that spending that is being paid for by a printing press, we don't get that for free. There is a cost. See, when the government takes our money through an income tax, they take my money that I earned and they give it to somebody else who didn't earn it. And now that person spends the money. But because I don't have it, I can't spend it, I can't invest it or save it. I don't have it anymore. The government took it from me in taxes. But if the government doesn't take it from me, they just print money and they hand it to somebody else who didn't earn it and didn't do any work, didn't produce any goods or provide any services. They just, got money from the government. That still costs me, because what happens is when that money is spent in a circulation, it bids up prices. And so prices are now higher than they would have been had that new money not been printed. And so now everything that I want to buy costs more than it otherwise would have cost. Either the prices went up or it prevented prices from going down. And so now my purchasing power has been diminished. And so either the government takes your money through an income tax or a sales tax or something, or they take your purchasing power through an inflation tax. And so that's what they decided to do, to pay for government through inflation rather than taxation. But what we know from history is that is the most expensive way to pay for government. And in fact, it hits hardest the middle class and the poor, because the rich have a lot of assets, they have a lot of debt, not consumer debt like on a credit card, but where they borrow money to accumulate income-producing property, to buy companies, stocks, things like that. And so inflation helps those people.
Peter, gold has been in a downward trend. So is this rebound we saw earlier likely to stick?
Well, I have no idea. It wasn't that, impressive a move, considering how much gold has dropped preceding this move on a Tuesday. A lot of things that were beaten up bounced back today. Look at the move we saw in the tech stocks that had been really getting hammered as rates were rising. So I don't know if we've seen the lows in gold, but I know for sure we haven't seen the highs. So when this correction is over, the price of gold is going much, much higher. Rates are going to have to stay low indefinitely because the entire economy is a bubble. I mean, it's not a legitimate recovery that we're enjoying. It's simply the spending of borrowed money and more literally printed money. We're running massive deficits. The federal government is spending over $8 trillion a year, but collecting less than $3.5 trillion in taxes. The difference is pretty much being supplied by the Fed, and Americans are spending all this money. That's why our trade deficits are skyrocketing right now. So the whole thing that's keeping this house of cards from imploding is 0% interest rates and QE. So the Fed is not going to pull the rug out from under this bubble, but it has to pretend that if it ever sees an inflation problem, that it's got the tools to fight it, even though it's bluffing, because even if it had the tools, it would never use them because the tools would destroy the house of cards that they've erected. Right now, I think the markets sense that inflation is going to be moving higher, and maybe even higher than what the Fed is acknowledging. But I think the markets still believe the Fed, that the Fed will be able to contain the inflation problem before it really runs out of control. So it's the expectation that the Fed's going to fight inflation by raising rates. That's what's pressuring gold. But the markets are wrong. I mean, the Fed is not even going to attempt to fight inflation. It's going to surrender. Inflation is going to win without a fight. And when the markets realize that the Fed is all bark and no bite, and that inflation is going to be an even bigger problem that is going to be uncontrollable, then the bottom is going to fall out of the dollar and gold's going through the roof. Certainly, there are some of the skeptics who are now capitulating, which is something that you might expect at the end of a mania. The early doubters, naysayers, can't help it, and they join the party usually pretty late. Whether or not this party is going to rage for a while longer, it's hard to say. I also question some of the legitimacy of some of these Bitcoin converts, because I think some of the people who are now bullish also have vested interest. They've kind of got involved in some crypto-related enterprise, and so it's in their financial interest to now be promoting Bitcoin. So whether or not their newfound love for Bitcoin is genuine or not, it's hard to say when there's a lot of money at stake and people are trying to get their piece of the pie before it's gone.
If you have debt to buy assets, inflation wipes out your debt. But if you're just saving money and working for a living and getting a paycheck, the inflation tax is very heavy on you. And that inflation tax is going to get much, much higher. I mean, the debt's never going to go down. The debt's going to keep on rising and rising and rising until the dollar implodes. See, that is the real crisis that we're headed for. It's going to be a collapse in the value of the dollar, because right now we're printing money, right? And the government is sending it out, and people are able to buy stuff with it, right? But that's going to come to an end, because the world is no longer going to accept US dollars as the reserve currency. See, that's the unique privilege that we've enjoyed for several generations now, and that we've abused to the point where we're going to lose it. See, right now, we're able to print money, and we use that money we print to buy all sorts of stuff that the rest of the world produces, that we didn't have to produce ourselves. But producing goods requires capital, it requires labor, it requires land, it requires real resources. But we get all the stuff for free. We just create money and here you go, and they send us stuff. And then, to make it even better for us, they take the money that we send them, the paper, and they loan it right back to us at very low rates of interest. They buy our bonds, they buy our mortgage-backed securities. So Americans get to spend all this borrowed money that they didn't save. We get to consume all this stuff that we didn't produce. And so we have an artificially elevated standard of living. We live beyond our means. That's going to come to an end because foreigners are going to realize that we're never going to stop printing money, that the deficits are never going to be brought under control, that we're going to have QE infinity, 0% interest rates in perpetuity, and then they're not going to want the dollar anymore. And then the dollar is going to crash, and we're not going to be able to import anything anymore. And the only things we're going to be able to buy is the stuff we make ourselves, except we don't make much stuff anymore.